Hello, everyone. This is Barry Martin, Portfolio Manager of the Shelton Capital Equity Income Fund. Today, I'll be discussing the third quarter of 2021 and what we see going forward. So far, year to date, the Shelton Capital Equity Income Fund produced a 14.85% return, which compared to the benchmark, the CBOE Buy Right Index of 12.61%, an outperformance of 224 basis points. We also currently have an 8.49% 12-month trailing yield. Overall, the market continued its upward trend over the third quarter. Financials and energy were able to continue the strong runs they have made this year, bringing the return of energy to just over 42% year to date, and the financials checking in at over 29%. While we're seeing the economy reopen and life is starting to return to normal, we are not entirely clear of COVID, although cases are dropping dramatically around the United States. From a sector perspective, the leaders in the third quarter were financials, utilities, and healthcare. While we've been seeing a rotation from growth to value early in the year, in the third quarter, we saw growth once again outperforming value. In reviewing economic data, we see the recovery trend has continued, although we have a ways to go before employment gets back to its pre-pandemic levels. This quarter saw a gradual fall in unemployment rate and inflation concerns coming to the forefront. The Federal Reserve believes the inflation to be transitory. Personally, I don't believe in that viewpoint. We believe inflation to be more sticky and certain sectors will outperform better in an inflationary environment, mainly financials, energy, and large cap tech. Volatility, in terms of looking at the VIX, dropped slightly from trading in the mid-20s, but is still somewhat elevated in the high teens. This allows us to generate significant cash returns while monetizing the volatility of the underlying security. We do this by, of course, selling covered calls. Our last dividend on September 30th was 51 cents. According to Morningstar, once again, our current 12-month trailing yield is 8.49%. As a reminder, our dividend is comprised of three things. First is the realized gain and option premium that is being earned. Then we have the dividend of the underlying equity that is being paid. And finally, any short-term gain that is associated with the stock being sold over the quarter. Going forward, we still believe we are in good shape in meeting our annual target of paying a dividend in the range of 6 to 9%. The main objective of the equity income fund is cash flow and income, but it can also be used as a large cap value portfolio with a lower standard deviation, or it could be used as an alternative to bonds to reduce one's exposure to credit, duration, and interest rate risk. With interest rates coming off of historic lows, we are continuing to see clients and advisors use this as a high yield junk bond alternative. Moving forward, we still expect to see strength in sectors that could be expected to perform well as we come further out of the COVID era and the economy reopens. With supply chain issues and inflation concerns upon us, companies that have the pricing power to do so may raise prices to pass on these costs to consumers. With valuations and market at historically high levels, we think our strategy is a good place to have a portfolio with equity exposure. With the VIX currently trading in the high teens, we are able to generate decent premiums that can buffer downside exposure if the market does slow down its run. The selling of volatility, which is one does when they sell covered calls, will continue to provide worthwhile cash flows. Well, that's all for now. If any questions, please feel free to reach out to myself or our territory sales rep. Thank you and take care.